So looking at current trends, what's going on, what are emerging topics on on the analytical sites, and one of the things that come up, Mark, is office vacancy rates. So with office vacancy rates hitting record highs in San Francisco and across the U.S., is the traditional office space model dead forever? What radical changes do landlords need to make to survive this downturn?
Yeah, I mean, this is what we talk about in San Francisco. My practice is nationwide, so I get to learn about all kinds of markets. San Francisco has certainly been in the news for a long time, how quickly we vacated our offices and how deep that has stayed for a while. San Francisco is coming back. I know that that's a media discussion as well. We've heard San Francisco will rise from the ashes. In fact, the flag of San Francisco is a phoenix rising out of the ashes, and that was actually created before the 1906 earthquake and burning of the city. I mean, we already were that, and they had foreseen. San Francisco's back, slowly progressing on the vacancy that you're talking about, but I went to a CBRE presentation
What's
recently.
CBRE?
CBRE is a large real estate consulting firm that they do everything from property management to helping owners make decisions about where to buy. They have tons of data around commercial real estate, and there is an individual in their data department that looks specifically, well, focuses on all metros, but tech talent. So talking about technology companies that have headcount and they need real estate. And there's a lot of topics I'm sure we'll touch on about why there's density in office, but your question is really about what are we doing in San Francisco to make changes to get people back? One of the changes is that venture capital money is coming into the Silicon Valley in huge droves. It's the focal point for AI. In fact, something like 85% of the venture capital money for AI is coming into this area, San Francisco, Silicon Valley, and yeah, it gets dispersed countrywide, worldwide from here. But we've got headquartered AI companies that are making a difference, and they want certain types of space. So I would say that the main thing that they want is the high-end, super nice office space that has communal areas and amenities that attract employees. So absorption of that vacant space right now is it's difficult because most of it's actually already taken, all of the very high-end Class A commercial. But they're going to places like down the peninsula. They're going into Mission Bay in San Francisco, which was a fairly new developed area with very nice office, and they're filling that up. The absorption rates are way faster than when we last talked, which I think was a year ago. Way quicker than anybody expected, and we'll probably be able to refill the San Francisco vacancy in the next 5 to 7 years if we keep at this pace. So that's what we're hearing. It's way faster than the 15 to 20 years that we talked about last time. So this is good.
Awesome. So San Francisco's downtown recovery. Okay, San Francisco's downtown San Francisco's downtown has been hammered by tech layoffs and empty offices. I've heard things like everything from Meta's laying off to other tech companies laying off. Maybe a lot of it due to the AI surgence, and like former Zendesk headquarter heading to auction at a massive discount. What is your bold prediction for the revival of San Francisco's commercial core in the next 12 months?
I mean, that space you're talking about with Zendesk is very nice. It's in the great part of the city. I don't think it's going to be too much trouble now that we have so many tenants knocking on doors looking for that space. I actually think that the CBRE presentation that, I think you can find this online. Go to CBRE's website, look for the tech talent report. I think it's out there for the masses. but they are comparing the .com trajectory of square footage absorption. So how quickly does the vacant space get leased up? And then they're looking at the app era, the mobile and app era, which ran from 2008 to 2019, how quick the absorption is happening. Right now with AI, that absorption is even faster. And the belief is that we're at the front edge of this new era. So we've got faster absorption, maybe a longer period of time that we're going to see need in the markets. San Francisco is the pinnacle of it. So I think San Francisco is coming back faster than anybody even projects currently.
Okay.
This is interesting, Mark. I heard Warren Buffett say this probably a year, maybe 18 months ago. He said about commercial real estate that the buildings will remain, but the names on the buildings will change. And I think that's kind of what you're alluding to is that, some of these major players, Zendesk, for example, they no longer are going to own that building, but somebody else will come in and fill that vacancy, and they'll take it over and take it to the next level. Is that kind of what you're
That's
leaning
right.
towards?
That's exactly right. I mean, many of these buildings have been here and filled and then vacant and then filled again, over decades, and it'll happen again.
Okay. I do got one question for you real quick while we're right here. So what is the ugly truth in commercial real estate right now that nobody wants to talk about? Like, what's that elephant in the room?
I I think that we're not talking about it enough, but there's this wall of maturities of commercial mortgage-backed securities and just the debt that is sitting on this office that we're talking about that's vacant. And when that debt comes due, somebody needs to pay it off, or they're going to get foreclosed on, or there's going to be other catastrophes that happen. So there's concern about that. If the asset values remain as low and the debt comes due, we're going to feel the effect significantly across the country, probably the world. But if asset values come back fast enough, hey, we might thread the needle. Let's see.
What's your prediction?
I think we're going to come back faster than anybody expects, and I think that there's going to be some pain, but I think a lot of the balance sheets of the holders of this debt and these assets have already taken a pretty big beating. I think the investors know what's coming. I think the smart people really understand what's going on. There may be not enough discussion about it outside of that group, and so maybe unexpected by some of the tertiary groups involved.
All right. Well, I'm gonna keep going with the going back to AI and data centers. Data centers are exploding with near zero vacancy rates due to AI demands. How is this reshaping commercial real estate, and could it be the savior for struggling markets like the Bay Area?
Well, what's interesting is data centers are not really located in the Bay Area. They're located in other markets that have more energy and lower cost of land. But then also they need to be in proximity of where these dark fiber infrastructures exist to plug between the East Coast and the West Coast and get use out of the data centers. But the data centers aren't typically here. I think there are smaller ones. Obviously, there's a lot of R&D happening where they need to house these things, but the big ones are located in other markets. Texas, I know, has one of the biggest being put in now. The thing is, you need to have people that are innovating on what that is going to be, and they can be anywhere in the world. Mm-hmm. It turns out that they are here in San Francisco or the Silicon Valley, and that is because follow the money. The money is coming in to the United States through the Silicon Valley, and some of the stats, like I said, 83% of all of the funds that are pointed at AI are coming here. They're landing in bank accounts controlled by headquartered venture-backed companies here, the biggest of which, may arguably is OpenAI. But other companies that are located here, the big names, Google and Meta and Salesforce, and these things are also located here, and they command quite a bit of the data center money as well. And so you need headcount. And I know we'll talk a little bit about headcount and that later on, but this is where the headcount needs to be. People are moving back to the Bay Area. So I think that investment, those data centers, wherever they're going to be, are going to migrate quality capital people here to the Bay Area. And we're seeing that in a variety of different places. Residential real estate in the Bay Area is starting to come back. There was an article recently about San Francisco rents, and that there's now a bidding war on apartments in San Francisco.
Wow.
And so landlords are coming in and saying, wow, I'm going to increase my rent 10%, 12%. And then people are coming in and offering up to 30% above that in order to be able to secure the apartments in the right locations. So this is the canary in the coal mine, for what's happening in San Francisco. What's interesting, right across the bay in Oakland, it's not happening yet, but it should. By economic means, we should see the effects of San Francisco trail over to Oakland and other cities that are in proximity.
All right. I can't believe people are getting multiple offers on apartment rentals. That's crazy.
Yeah.
I never seen that before.
It's interesting, and I think more or less what you're getting to about Oakland, how it should transfer over, it probably will, but it's just going to take a matter of time. And once the vacancies get filled in San Francisco, Oakland will probably see it next. So would it be, would you be advising your clients that maybe start looking into the Oakland market?
I would. I think there's great transportation to come in from a wide area around the Bay Area. I mean, we have Bay Area Rapid Transit. It's called BART. We call it BART. It's a train that's been around since the 60s, and it goes as far south as San Jose, and it goes all the way out to Pleasanton, which is way past Oakland. So all of these markets, as the boom and bust cycles happen, typically the increase in asset value and rents, it goes further out, and then it contracts back into San Francisco.